Picture on exactly how things have fared thus far when it comes to the European and local front, of course. Markets have been quite catchy and have taken on some gain of late, considering just how things have fared, particularly in Europe, that Chinese trade situation. Even the Mexico one has taken to the fore. Of course, the big one back home is policy issues around the Reserve Bank. But the JSE headed higher right now at 57,299 points there. So some good numbers coming through. Of course, there was a sense of positivity when it comes to Tencent as well out in Hong Kong, so perhaps bringing in that sense of positivity here locally, so the industrials and financials both go on higher. The only saving grace in recent times has been the resource stocks, and today is pretty much the same sentiment as well. Those resource counters going up, not for the sake of the gold shares, however. They seem to have gone down. Of course, Sibanye-Stillwater still set to decrease, to cut its number of jobs. They're going around to 3,400 odd jobs now, as opposed to the 6,000 initially. Platinum stocks headed a little bit higher. Let's quickly check in as well on that commodity market. $1,336 a fine ounce for gold, still firmly above that mark and continuously climbing. It's becoming a little bit more of that safe haven stock when turmoil happens around the world, so that figure seems to be headed a little bit higher. Platinum is playing in between that $800 a fine ounce mark, a little difficult to keep a hold of exactly where it is, and boy oh boy is that oil price going down, but better at these levels than perhaps lower than this for the oil exporting nations. For now, $61 odd. Nearly 15 Rand against the US dollar. That is the mark for the Rand. An 8-month low. The last time it reached this point was in October 2018, as it was reaching around that 15 Rand against the US dollar mark. It is scary to get there, of course, and the hope here is that the policy issues around the South African Reserve Bank, among others, will of course not make things worse. It is a whole conundrum of issues, including that GDP growth number seeing us contract 3.2% in the first quarter. We had PMI numbers seeing that dwindle, of course, as well. So the sentiment in South Africa isn't positive at all. All right. Let's quickly check in on that European market picture as well, very quickly. All green today as well. A sense of positivity filtering through into the market there. So let's unpack all of this now a little bit more. We've got Gary Boyson, who joins us from Rand Swiss, and he's live at the Johannesburg Stock Exchange. Appreciate your time there, Gary. 1/3% to the good for the JSE All Share. A bit of sense of green. BHP Bulletin wasn't doing too well out in Australia this morning, but we are getting a sense now that perhaps investors are still looking for good value stocks, right? Surely that must be the case.
Yeah, we're seeing a little bit of a pickup in the commodity stocks. Part of that is certainly because of that weaker currency. Now, obviously, with a weaker currency and a lot of our commodity counters, pricing their final product in dollars, you do generally tend to see that the resources do rally on a weaker currency. The problem is if you look further out and you think that some of the miners, certainly the miners that operate locally, not a multinational like BHP, but you look at the local miners, you should be looking at this currency and potentially being concerned. In the short term, it's very good for the sale of their products, but in the longer term, they've got to spend capital. They've got to replace that yellow machinery as well, and that makes imported goods far more expensive for them. So in the short term, we do get a lift generally in the stock prices. That's helping to buoy things. The other Rand hedges, certainly the Rand hedge industrials, the likes of Naspers, Richemont also firmer as well. So you're seeing some of those Rand hedges just feeding off that currency and helping to lift the overall market.
When you take a look at that Rand picture, as you mentioned, yes, the likes of BHP won't necessarily be happy with that figure over the long term, but 15 Rand surely is that resistance level, right? And that's the mark we don't want to reach, and it's just been a cocktail of issues on the local front.
Yeah, it's been a combination. So certainly, I think if you look at the round numbers, the 15 Rand level, it is a psychological level as well. We're a hair's breadth away from that. The local currency can move 10 cents in a matter of minutes. While we're sitting here, we could potentially breach the 15 Rand level. But a lot of this movement is coming from I suppose the local talk about changing the Reserve Bank mandate. Obviously very, very weak GDP numbers filtering into foreigners' view of what's going on in South Africa as well, and that helping to weaken the currency. Changing the Reserve Bank mandate, certainly, I think that would be viewed internationally as weakening the institution. Our Reserve Bank has always been held up as a very positive factor, especially in the likes of the credit ratings reports that we've been viewing over the last couple of months. And so I think an assault on either sovereignty or the changing the mandate to include growth potentially would be seen negatively by markets, and we would probably see a weaker currency on the back of that. At the same time, this isn't just a local story. We've, as you mentioned at the top of the show, we've still got a lot of concern around the US, certainly the US-Chinese trade war, but also the potential tariffs that will be coming in on Mexico. And with the Mexican peso having weakened significantly over the last couple of weeks, the South African rand almost does trade in tandem. You see a lot of basket trades going through like that, and as emerging market currencies sell off, the rand almost is hitched to that and moves up and moves weaker as well. So it's a little bit of both. Certainly, as you said, we've seen the gold price rallying aggressively as risk-off trade bites, and in a risk-off environment, you've got to expect something like the rand to weaken no matter what's happening domestically.
Risk-off, but if there's chances of a rate cut in the United States, surely risk gets back on.
And that's what they talk about. We used to call it the Bernanke put. So every time markets started to look shaky, you could always count on the central banks getting involved overseas and pursuing more accommodative monetary policy, and that lift equity markets. So I don't know if it's going to come right this time, but certainly if you look at the federal funds futures, which is a method of essentially taking a bet on the direction of US interest rates, we have now got in the next meeting, next Fed meeting, which will be in about 2 weeks' time, it's around a 20% chance that we'll see a rate cut coming through from the US in that meeting, and that's up from about 13% last week. So certainly the market's starting to price in the likelihood of further rate cuts in the US. If we look out to the December meeting, though, there's a 99% chance currently, that's what the market is telling us, that we will see a rate cut from the US. So we should expect lower rates from the US, which will give our Reserve Bank, whether we change the mandate or not, probably some room to pursue a slightly more accommodative rate policy.
Yeah. Okay. Well, Gary, very quickly then, a quick touch on that currency one more time then. At these levels, how much more does it perhaps increase the issues and the problems that President Cyril Ramaphosa has? Of course, he's faced quite a barrage of them. The GDP data coming out, PMI wasn't that great either, business confidence numbers. We also then had today that current account deficit widening as well. So the problems are compounding there. Let's chat about that current account data.
So if you look at the current account data, it was a miss of expectations. But if you look at it over the quarter, it is actually within a very reasonable bound. So obviously you don't want to see your current account deficit widening if you can help it. But at the same time, especially because South Africa's current account deficit is funded through portfolio flows. But if you have a look at it, the number in itself, I think, it's telling the story that we're seeing in a lot of the other economic numbers as well. It's just a continuation of the same story that we're seeing in the GDP numbers. As you said, we're seeing in the business confidence numbers already. And while this number was a slight miss, it wasn't anywhere near as dramatic as the GDP numbers earlier in the week. But the fact remains that the SA economy is under an enormous amount of pressure, and without some sort of policy intervention and policy change, it's a pretty dire outlook for local business.
Yeah, Gary, appreciate your time this afternoon, but always great chatting to you as well. Hopefully we'll get to see you soon as well. There, Gary Boyson from Rand Swiss, unpacking that market picture for us and giving us a sense of just how markets are perhaps feeling with regards to how things are going, whether it be that trade war or even the political situation here locally. We'll get to unpack more economic news. That current account number we'll get to chat about in just a moment. Do stay tuned. This is On Point.